welcome to GIRT, a long-form conversation by the Australian Prosperity Institute. You know, each episode we take a question, the kind that people are asking, and try to work through it carefully. No hot takes, no party lines, just a serious attempt to understand, what's happening, why it matters, where the trade-offs really sit, blah, 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 all the stuff that should be relevant to these questions. I'm Ethan Urch, and my focus is on how Australia can build long-term prosperity that feels real in people's everyday lives. Owen?
I'm Owen Reese, and my job here is to try and figure stuff out before we start recording, and then try not to get the facts wrong. But I'll do my best.
You're the big brain.
Well, yeah,
you're the book smart.
I'm not sure if big brain. Yeah.
Or am I complimenting you too much?
Yeah. You're making me nervous.
That's all right. Too
Bashful.
much. Bashful. Yeah. Okay. So your background's a bit more economic and.
Yeah. So I've just finished my bachelor's of. I majored in political science and economics.
Yeah. So he knows what he's talking about.
Yeah.
Yeah. All right. And so the point is, this isn't a debate show. It's not about winning an argument. It's about reasoning in public. So let's start with today's question, Owen.
So today's question is: should Australia scrap the capital gains tax discount? Which is sort of a perennial question in Australian politics. It's quite contentious. Bill Shorten, famously, a lot of people think that he lost his great big election because
of 2019.
2019. So he took a capital gains tax reform and negative gearing reform to the election and lost, and it sort of parked that issue.
Mm-hmm. It became like a no, don't touch it.
Yeah, I think a lot of Labor people sort of got a bit scared of it because you have to win the election to make the change, and if the Australian people, if it gets read as the Australian people emphatically disagreeing with your point on a big policy issue like that,
mm-hmm.
then you sort of go, well, we might think it's the right thing to do, but the people have spoken. Sort of thing. So which kind of makes it a problem. But that was actually quite a long time ago now.
More like 7 years ago.
2026. So and also things have changed quite a bit since then. Like house prices have gone absolutely bonkers.
Mm-hmm.
So there's some people are thinking about revisiting this maybe in the May budget. This is sort of back on the agenda. So I think it's a good time to talk about it.
Wasn't it recently they were talking about it?
Yeah. So there's a few sort of thought balloons getting pushed out there. Maybe we play with this. Maybe we have a look at it.
Mm-hmm.
Capital gains discount. That is. Yeah.
Yep. All right. Not the franking credits.
No. That's probably another episode.
That's a different. Yeah. Okay. So I guess you've already given a bit of a backstory, but we can, clearly what is the CGT discount and how does it work? And
cool. So I'm going to try and give you like a broke person sort of overview of it, because I'm not getting the capital gains tax discount. I don't have like a big investment portfolio. I'm not a finance person. I don't have a finance degree. I'm not like an expert in, I'm not like a realtor or
we wish.
Yeah.
So this podcast would be very different if it was.
We may not be doing this actually.
Yeah, true.
If we were super loaded.
Yeah.
So I'll try and give a brief overview of how it works. It was introduced in 1999 by John Howard and Peter Costello.
Mm-hmm.
It's to encourage people to invest their money. Basically, it's a 50% discount on the rate of tax that they pay on assets that appreciate over a 12-month period. So you have to buy the asset, and then you got to hold the asset. And then if you sell it after 12 months, you only pay tax on 50% of the amount that the asset's gone up. So say you buy a house for $500,000 today, and then you sell it for $600,000 a year down the track. You've made $100,000 profit.
Mm-hmm.
With the capital gains tax discount, you only have to pay tax on $50,000.
Only on half of it. Okay.
Yeah. So then you add that into your other forms of income, and it lowers it could lower you into a lower tax bracket, and it will also lower the total amount of money that you have to pay tax on that you're bringing in. So, yeah.
Is that feeding into why there's some empty apartments? Or there's rumors going around, there's empty apartments or empty buildings or houses, or like property that's just
Well, I'm not sure that they're really linked.
Or am I being too speculative?
No, I suppose like
accusatory.
Like if you know that you're going to make profit off just the asset appreciating and then you're selling it, and then I suppose it takes a little bit of pressure off you in terms of having to rent it or Airbnb it or whatever to.
Like if it just sits there.
Yeah, if it just sits there and goes up in value, then you're going to make money. You make more money if you're renting it out, but I suppose it does have somewhat of an impact on it.
Yeah. Okay.
I guess like people buy the house and then they do what they want with it.
Yeah, it's their property.
Yeah, I suppose so.
Understandable.
Yeah.
But
But I'm not sure it's like really affecting that.
Okay.
But it is making investment in it does make investment in assets more attractive, which makes more people want to do it, which means there's more demand for those assets in the market, which means that the price goes up, which is sort of what I think's happened with housing in Australia.
Yeah. Okay.
So
like a majority of the demand is investments, or people trying to just get in the market because they need somewhere to live, or or is that too?
Recently, since this is interesting, maybe a bit of a rabbit hole, but recently since the government's brought in the 5% home deposits, there has been a big spike in investment home loans. I think it's quite a bit higher than the first home buyers. It crowds out first home buyers. The long term trend here is that if you're going to a housing auction and you got to bid against people who have heaps of equity because they have an investment portfolio, and then they can pay more than you can. So
because it's your first time.
Yeah, and also like if the tax settings were slightly different, then they probably would be putting their money elsewhere. So the tax settings as they are, it's quite attractive to put that money into property. There's one reason why property is sort of can be a better investment than shares, because you can leverage it. So say you buy $100,000 worth of shares and that goes up 10% over a year, then you've got $110,000. But if you get $100,000 and you get a home loan, you invest in a house, it goes up 10%, and that's $1 million house. Now it's $1.1 million. So there's other reasons why housing is an attractive reason or attractive place to put your money.
Because it is a physical thing too.
Yeah.
So that's in itself is inherently valuable as well.
Yeah, I mean, like, you could start a business. That would be
better.
Well, then you'd employ people, and for your own. Yeah, I don't really want to talk about people's like personal financial sort of.
No, this isn't advice. I just want to clarify this isn't personal.
Yeah, like how to get rich quick or whatever.
Yeah.
Try and think about it a bit more like, what kind of society we want to live in, I guess. And,
yeah. I know that talking on the business and housing investment thing, I think I saw somewhere there was like the statistic of, maybe like 30, 40 years ago, where banks would invest like 70% into businesses compared to housing. And now it's flipped.
Right.
In Australia.
Yeah.
Yeah. Where majority of bank loans go towards property as opposed to business.
Yeah. Yeah. Well, I mean, the value of Australian housing stock is kind of staggering. It's, it's just past $12 trillion. So there's a lot of cash sitting there, and it has been rising quite quickly. The mean value of a house in Australia is now over $1 million. We're sort of like this nation of millionaires if you've got a house, which is kind of
Kind
of
technically
wild.
We're all millionaires. Yeah.
Yeah. Well, I'm not.
I'm not. No.
I'm renting. But
It'd be nice if we were. I suppose so. Just to clarify, this isn't just about property. It applies to all shares and all other investments.
Yeah,
too.
yeah. So any asset that you own for 12 months, you sell it for after 12 months, and then you pay half the tax. And basically it means like if you make your money by working a job, and you if you made that same income from buying and selling assets, you'd be paying half the tax that you would if you were just working the job. Which I mean, to someone who doesn't have heaps of cash, they're like, whoa, that's crazy. Like, why would you make less? Why would you pay a lot less tax if you were just buying and selling houses than if you were like a nurse or a doctor or whatever?
Yeah. Okay. So that's who greatly benefits.
Yeah.
People who make it their full-time job.
Yeah. Or I mean, the other ones, like it's always capital gains tax and negative gearing. They're sort of like the I guess like the two evil twins of Australian tax policy, depending on like who you ask. But
yeah. So evil twin in the sense of like, does one have to live for the other, or one can only survive, or do they?
Well, they work really well together.
Okay.
To make you pay a lot less tax. So the capital gains tax discount gives you a big tax break when you sell the asset, and negative gearing gives you a really great tax break when you're renting it out. So say you're renting out a house and it costs 30 grand a year, and that's to rent it. So your revenue's 30 grand a year from the house, but then the mortgage on the house and the costs of running the house, like paying the property manager and maintenance or whatever.
Okay.
Say that costs 50 grand a year.
Yeah.
So there's a 20 grand loss. So negative gearing is there to encourage property investors to enter the market anyway, because say they have a really high tax job, like they're a lawyer or a surgeon or whatever, and they have a really, really high tax rate, and negative gearing allows them to take that gap off their total tax bill.
Okay.
So they take 20 grand off their total tax bill, which is it can be very attractive, especially if you start stacking them up, Yeah.
Because if like the fact that you own a house, you already $100,000 plus paid person a year or more.
Possibly, yeah.
Right? Theoretically. Like lawyer, what you said.
Yeah.
And then you have a property, whether you live in it or not.
Yeah.
That's still, that could bump up your tax bracket.
Yeah.
And then you'll get heavily taxed even more. So that's what the point of it is, the negative gearing?
Well, it's there to just, like, if I'm going to like steel man the argument for negative gearing, it's there to like stop investors leaving the market because they're not getting an immediate return through their rental. And the idea is that like if all of the investors leave, then there's nobody renting houses, and then nobody has a house to rent. So whether it's like, here's where I think there's like, you can have a bit more nuance in this discussion. Like, it's not like all or nothing. We just got to maybe have a frank conversation about where we put the needle,
Because the negative gearing just sounds like a good policy at the beginning, just to kickstart that, you know what I mean?
Yeah.
To encourage the investment.
But basically how it works is like you've got a big housing portfolio, and the government's giving you a big tax break while you're renting it out, and the property's appreciating in value.
Yeah.
And then they're giving you a big tax break when you sell it. So you sort of like benefiting.
Yeah, it's double dipping in a sense. Yeah. But so from the sounds of it, I feel like the negative gearing sounds like the less evil twin.
Yeah, possibly.
Or
yeah, I mean, yeah, I think we should,
not that we're trying to categorize and put them on the list or anything.
Yeah. I think like if I was like a benevolent dictator, then I might consider a whole package that changes
change both of them.
Yeah, it changes both of them.
Yeah, okay. But if you only had a guillotine that worked once, which one?
Well, I think capital gains tax discount is probably a good place to start. I mean, there's just some big there's some big equity questions that I think that it at least politically goes some way to sort of saying, yeah, we get it, and we're like addressing this issue, and we care that you feel like you're getting left behind or whatever. Something I want to talk about today was this thing called the median housing multiple. Now this is you basically take the median value of a house, and median means middle. So it means
across the whole market.
Yeah, I know this is like most people that are listening to this probably have done their high school maths or whatever, but it's I think it's kind of important to say like average and median. I think when you're talking about housing and income, median is kind of more valuable because there's outliers on the top end that throw out the number. So the median household income in Australia is about $92,000 a year. So the whole house is making roughly $92,000 a year.
Yeah.
And the median,
which sounds low if that's like a house that has two people bringing a wage in.
Yeah. So like a lot of people don't work full time. A lot of people don't work. A lot of people are on pensions, and then when you look at the median household income of $92,000 a year, and then you go, what are the average full time earnings? They're over 100 grand, and you're like, well, hang on, that doesn't make sense. But it's because the average full time earnings that number's being stretched really, really high because of all of the really, really big earners and the sort of, I guess, like the wage inequality in the system or whatever.
Yeah.
But anyway, the median housing multiple is median dwelling divided by median household income. So in Australia, the median housing multiple is 9.7. That means it takes 9.7 years of a median household income to buy a median value property.
Yeah. Wasn't it like back in the 70s or something? It was like maybe like 3 or...
Yeah. So that's gone up a lot, which means that the value of a house has gone up much, much faster than the wage.
Yeah.
Which is I think it's like the political problem in Australia. I really can't think of anything else that is more sort of thorny and everything sort of flows from it. I think. I think it's our generation's kind of, well, one, I mean, obviously climate change. There's other big problems in the world, but I think this is a really big. It's a massive fruit on a tree for a smart political movement. If they can fix this, they're going to be kings. But they're going to be like Menzies. They're going to be like generational sort of. I think anyway.
Okay.
But like, take note,
any politicians watching. Yeah.
To put it in perspective, right? Like, it's Australia's median housing multiple is nearly double that of the UK and the USA. So
that's crazy.
Yeah, it is crazy.
And we're such a small economy compared. We're a small country.
We're quite rich. I mean, like Australia's economy is pretty good. I mean, it's maybe unevenly sort of
distributed,
distributed, but actually, even on that mark, I think I was reading the other day that income inequality is pretty good in Australia. So in terms of like wage differentials, like, and this is a story that you sometimes hear, the plumber can live on the same street as the doctor.
Yeah, I think like Modi bragged about that. For Australia. Yeah. Indian Prime Minister.
But then asset inequality is where Australia is like, there's a much bigger chasm. So this housing is a big part of this.
Yeah.
Yes.
Is it if the plumber bought less jet skis and more rental properties?
Right.
Would that change it or?
Well, yeah, I mean, yeah, jet skis look like a lot of fun. I've never
used one either, but it does look fun. Yeah,
it does look fun. But yeah, like, so if you break it down further, so 9.7 around the country, and Sydney is the most cooked. If you don't have property, it's 13.8, which makes it the second least affordable city in the world after Hong Kong. And basically any score over 9 would be classified as impossibly unaffordable. And most of Australia's capital cities are over 9. So
and just to clarify, it'll take 9 years of your income to pay off and buy a property.
The whole house's income.
Yeah.
So
okay.
The value of the house is 9 years of every cent that comes in the door. If you're the middle Australia, so if you're the median, you're right in the middle, and half of Australia is only less.
Yeah.
So for everybody under 49.9%, that figure gets harder and harder and harder, and yeah. So and this wasn't always the case. So as you said, in the 80s it was closer to 3. So which seems more
reasonable.
It seems more manageable, and yeah, they had like higher interest rates than that. But even with the interest rates higher, I mean, this is another like real basic like math problem. Like 3% of a million is a bigger number than 18% of 100,000. Yeah. So I don't know, but this is where we get into this like intergenerational. Oh, well, it was hard in my day too, or whatever. Like,
I'm sure it was.
Yeah,
and no one's saying it's not. We're just saying it's different.
Yeah,
or the gap's a bit wider.
Yeah, the gap's a lot wider, and the critics of capital gains tax discount say that this is one of the reasons why. Basically, like, there's a supply push or a demand pull argument for the reason why housing is becoming more expensive in Australia. And the supply argument is far less contentious than the demand argument. The supply argument is that we're just not building enough houses, which is totally true.
Yeah.
If we build more houses, there'll be more.
We are building houses, just not enough.
Yeah. So, and actually, we're building a lot of houses. Australia. Like, I think, there's been heaps of housing construction in Melbourne, and there's more coming down the pipeline. And there's zoning laws that are changing to sort of like look at that. So
Yeah, no, there's a few on state level here. Yeah.
Yeah.
Okay.
So if it's just the supply argument, then the capital gains tax discount sort of gets taken out. Is they say you just need to build more houses, and it doesn't really matter like what it doesn't really matter what policy mechanisms are there to like encourage people to put their money here or there, or
it's a bait and switch situation. Like let's talk about that rather than this.
Well, yeah, I think it's more complicated than that.
Yeah, okay. It's not one or the other.
Yeah.
Okay, all right,
I mean, like if you do like high school economics, like you see the supply demand graph. It's like two lines, and then like if supply goes down, the price goes up, but if demand goes up, the price goes up. So if we've been undersupplying houses, then yeah, the price is going to go up. But also if we're juicing demand with government policies, then yeah, the price is going to go up. And the capital gains tax discount does juice demand for houses because it like basically like imagine you got this pool of money. I know that must sound really, really cool. Because I certainly don't.
Scrooge McDuck jump in it. That'd be nice.
If you look at my bank statement, you're not going to see that issue for me. But you got this pool of money, and then you're like, what am I going to do with it? I can't. If I leave it in the bank, it's going to get eaten up by tax because you get taxed on the income that you make from interest that you get in the bank. But it's also going to get eaten up by inflation. So inflation is going to erode what 3% of the value of that pool of money every year, and that's going to compound. So if you've got all this cash, you're like, I've got to do something with it.
Yeah.
Otherwise, it's almost like slowly, smoldering away. If I just leave it sitting in the bank. And then you're like, well, what do I do? And then you say, well, I could invest in shares or I could invest in housing. And then
which one has the cleaner return on investment?
Yeah. So and if you start looking at it like that, then you sort of start thinking like, the government's really, really generous tax concessions on housing make people start going, well, if I don't do it, then my money's just disappearing. So you almost sort of have to do it. Like if you're
because it doesn't feel like an investment at that point. Because usually the word investment has a risk attached to it.
Yeah, sure. Yeah, and I suppose there is risk in like housing that it won't keep going up, although.
I don't think it's been going up for a while.
There was a big, the global financial crisis happened because house prices fell pretty quickly in the States. Yeah. So it's interesting. You can really, really see after 1999, is when house prices started to decouple from wage growth in Australia. But before this policy was instituted, they sort of grew in tandem, which seems like unless you want to make money by appreciating house prices, it seems like a fairly good way to sort of run a society, I suppose. Like the wage goes up, the house price goes up, nobody goes into negative equity, and everybody's sort of able to afford a house if they work hard. And after this, after the Howard reforms, the house prices just started shooting up.
Yeah.
Faster than wages. So, every year that passed, if you were just earning a wage and you weren't earning your money through appreciating assets, then you just feel like you're falling behind. You're running on the treadmill, but there's a dude in a bike next to you who's getting away from you.
He invested on that bike. So like it reminds me of that graph. There's like a thing that gets shared on Instagram every now and again where you see those two lines working in tandem. Yeah. And then Ronald Reagan's face pops up and screams at you.
Oh, yeah.
And then the lines separate.
Yeah. This is the inequality more broadly?
Yeah. So is Howard our Reagan or something without being accusatory?
Well, yeah, I don't know about that, but he definitely made some choices that made it's so complicated. There's so many layers to like why house prices get more expensive. Like, and lumping all of the blame on the federal government doesn't really. Yeah. Like the councils are really involved because they keep saying no to
certain developments and stuff like that.
And then the state governments are really involved as well because they charge rates and stamp duty and they have all of these levers to make it more or less expensive to buy and sell houses.
Yeah. Okay. So on that, wasn't there there's a Victorian example lately?
Yeah. So this is instructive
because if it's not all just federal, then the states have a role to play.
So I've seen some modeling that says that reforming the capital gains tax discount is not really going to do that much to lower house prices, which is, I suppose kind of a bummer if you're hoping that a house is going to cost $400,000 again.
Yeah.
Now there's a lot of things going on at the same time. There's a lot, like there's how many houses are being built, and then also there's like, how are tax incentives like distorting the market, and but in Victoria we have seen recently there's been a few things the government's done. They've put a tax on like the sort of short stay, like Airbnb style things.
Yeah.
To discourage people from getting into that, investing in that market. And they've also put there's an empty house sort of tax.
Yeah.
And they've increased land taxes as well.
Because I got two experiences with that, just two stories to tell.
Yeah.
I used to work in Docklands.
Yeah.
Right? In Melbourne. Absolute ghost town.
Yeah.
And the neighbor that used to work next to us, his job was to do, wharf maintenance. And the amount of those little code locks that he would cut off bicycle racks or bins or,
right.
He'd just keep collecting them and, because they're not meant to be there. City council property, it's public property, right? And there's people just attaching these things, and he'd always be cutting these keys off. But like the fact that there were so many, like clearly, especially in the Docklands area alone, just shows how many of those apartments may be empty, or explains why the area is a ghost town. And then the other story I had, I've now currently forgotten. Oh no, wait, there was like this guy who we were building something for, because I worked in boats, and he would brag to us about how he would have to just go to his investment properties once a week, turn the taps on, turn the lights on, act like someone's living there, because the state government could detect, whether this house has been sitting stagnant based on power and water usage.
Interesting.
I don't know. Maybe that's just like a little tip of the iceberg, or it's a one-off.
Yeah, I suppose
I'm being too accusatory, or I don't know.
Your government could put whatever regulation it wants in place that people are always going to figure out a way around it to make money, or do what they want. That's interesting.
Sorry to run us off there.
No. It's interesting thinking of Docklands as this like ghost town full of Airbnbs.
Because like the second you cross Southern Cross Station,
crazy. So basically, like the government's like this, it's really hard for people to get into the house. Or, I mean, also the state government needs to raise money, right? That's another thing. Their budget situation is that they need to figure out ways to make more money. And they're trying to maybe, do that in a way that might, benefit some people obviously, like if you own a lot of investment properties and they put land tax up, that's not great for you. But, I think you could probably make an argument that it's kind of, I don't know, more progressive. Well, it's more progressive than raising. It's a more progressive way of raising taxes than other ways that hurt people who make their money by getting paid doing a job. But anyway, so they put land taxes up. They do these things that basically make it less attractive to invest in properties in Victoria. And a lot of people, yell and scream about it. There's like all the property investment, representative groups and the AFR, and they're like, oh, Melbourne's, an economic hellhole, and the economy is so terrible because people aren't investing in houses, and they're not basically, like every other city in the country has had this huge like housing, spike in inflation, like in inflation in house prices.
Yep.
Melbourne's this weird outlier. Melbourne's all of a sudden one of the most affordable cities.
Yeah.
And that's not just, this is just like I was talking to someone the other day about this who's like not like super into politics or any of this stuff, and I was like, oh yeah, like house prices have stopped going up in Melbourne. Like this is really great, and he was like, you don't get credit, like you don't get like house prices suck, like.
Just in general,
rent sucks.
It's still high.
It stopped going up as quickly as it is in other cities, but it's still.
Because like the way I try to explain it is like, for example, Brisbane's gone up
Yeah.
right?
Huge.
It's one of the most expensive places to live.
Yeah.
Right, in Australia.
And Perth.
Yeah. Right? And I grew up there in Brisbane. I don't know about Perth, and you go, really? Like the train doesn't get you anywhere.
Right.
The buses are unreliable.
Let's trash our. I grew up in Perth, so let's trash our home states.
No, I love Queensland and I love Brisbane. It's just like the comparison there. What I'm trying to get at is that for what you get, the price you pay for like that sense of community, that access to public transport, the ease of access and mobility through a city. Melbourne is probably the best value.
I choose to live here for sure.
Yeah, I choose to live here too. And like, it was a little bit expensive when I moved from Brisbane to here. But then when I had a look at the number, right, it's just gone up. Like I used to pay $460 a week for a 3-bedroom house.
Yeah.
And I was 2 train stops from central Brisbane.
Yeah.
Or three train stops, right? And now that same house is just like doubled.
Yeah. Yeah. I hear some horror stories about how much people are paying rent in Perth. So we got a natural experiment, right?
Yeah.
We got a natural experiment.
Tale of two cities.
Yeah. We've got Melbourne, this weird outlier where rent and house prices stop going up so quickly. And the story is, depending if you talk to like the ideologues at the AFR and stuff, they're like, oh, well, it's because the economy's in a shambles. But I think it's actually because I live here and I don't think the economy, I think Melbourne's doing just fine. But they've made it less profitable to invest in properties, which is what the capital gains, reforming the capital gains tax discount. That's what it would
contribute to that.
That's what it would do. If the tax that you had to pay on appreciating assets went up, less people would want to buy the assets because they'd make less money doing it. So they'd put their money elsewhere. This is what I was talking about before, about like,
would that free up houses just to be rented out or bought? Or
so like they've got this big pool of money and they're trying to put it in the place where it either makes money or doesn't lose money.
Mm-hmm.
Because they don't want it to go backwards. They want to go forwards. And like at the moment, putting it in a house is a really good place to store it because the
number's not going to go down.
Well, the house prices keep going up, but also that you get preferable tax treatment, so you pay a lot less tax than if you just left it in the bank and took the interest.
Yeah.
So in Melbourne, they've just put the brake on a bit, and what's happened is investors have left the market. And if you think about the arguments for negative gearing, like you need to have investors to have places for people to rent.
There's a truth in there.
Yeah, it's more complicated though, and we're seeing that play out in real time because in Melbourne, the investors are leaving, but the houses are still there and the people are still there. And what's happening is the renters are buying the houses off the investors.
Yeah.
So there's less people competing for rentals because more people are moving into their own house.
Yeah.
So that's why investors are leaving and rent prices aren't going up. Because there's not this huge spike in people desperate to rent a house because there are a lot of people in Victoria are moving to their own house, which is, that's cool.
There's a lot of benefits there. You get to stay in your community. You get to still, that's a whole other conversation. We'll talk about that. But the fact that you get to still live where you want rather than having to move to some of that suburban sprawl, out towards Seymour or something.
Yeah. I mean, well, that's still happening though. And that's the thing. Like, that's where like, you can't raise the victory flag so quickly because people's lives still are tough, and like housing's still tough and rents have gone up a lot in Melbourne and they've just stopped going up now. So
they've stabilized a bit.
Yeah, they've stabilized.
Yeah. Okay.
But yeah, I've got a graph up, which we can put up.
I'll probably put it up on the screen here somewhere.
So investors in Australia growing much higher than investors in Victoria, and first home buyers in Victoria much higher than first home buyers in Australia. So
damn, isn't that the whole point?
Yeah, unless you want
people into the market.
Yeah.
Okay. All right.
So I don't know. This is
So Line says that it's working.
Well, it's what it says to me is like, if you make it less attractive to speculate on house prices, less people will do it.
Yeah.
So maybe there's something to this getting rid of the capital gains tax. Maybe there's something to it. Like And there's another argument as well, like from an economic perspective, that's less about equity and fairness. You know, it's like we've got this huge pool of cash sitting in Australia in houses.
Yeah.
Like it's just sitting there and it's not really doing anything. Like Australians have less shares than Americans do, for instance. If we've got all this cash sitting around, you know, we could be investing it in businesses, be investing it in, you know, businesses that do R&D and you know,
that actually, you know, evolve the economy.
But a house just sits there.
Yeah.
It doesn't employ anybody.
No.
So yeah, there are other arguments.
If anyone that it does employ, it's just a slither.
Yeah.
You know, the initial builder.
Yeah.
You know, the people maintenance, you know, an electrician every now and again.
Yeah.
You know, a gardener.
Yeah.
But that doesn't sound like enough people.
It's not a medium-sized business. Or, you know, it's not. Yeah.
It's not employing someone full-time constantly like a business would.
Yeah.
It's just the occasional shift here and there.
Yeah.
Yeah.
So most Western countries treat capital gains differently to income. Like the income tax is higher than capital gains tax. And it's because they want investment in the economy. And I don't even think that's a bad thing, like per se. You know, we've got to fight for investment. We've got to compete for investment in Australia with other countries. You know, there is an issue with like capital flight. You know, like if all of a sudden Australia becomes, I mean, I'm not saying this is going to happen with reforming the capital gains discount, but say, well, you know, we go like full Venezuela and you know, like
state runs everything.
Yeah, and then there is a risk that a lot of that investment goes well, it will go elsewhere because, you know, like as I said before, like I think like people put their money where it's attractive to do so.
Yeah,
you know, and there's not immoral. It's not immoral. It's just natural. I feel like it's like it's like human natural behavior. It's like a natural law or whatever.
Yeah. Like my wheat grows better in that field. Like as a caveman, right?
Yeah.
You'll be like, oh, my wheat grows better in that field than this field.
Yeah, totally.
Well, I'm going to keep planting seeds here.
That's like a good analogy. Yeah. So, I just think if the government can figure out a way to divert some of that money away from speculating on house prices and into something, I mean, building houses would be a great thing to do. You know what I mean? Like this is something I've sort of said to a few people, like, you know, why don't we just like put negative gearing and capital gains on steroids, but just for new builds? You know?
Yeah. Okay. New build.
Like if we need more supply, make it way more profitable to build houses than to buy ones that are already sitting there.
Yeah. Yeah. Or like on individual properties.
Yeah.
Yeah. Okay. Yeah. Yeah. That could work as well. Or like even, because I know that there's a big problem of builder companies, right? Companies that build properties. They seem to just disappear and default, and
it's tricky,
you know. But then I was like, not saying that's a strategic thing, but anyway,
yeah.
But maybe if there was more investment in these companies that were actually building the properties,
yeah,
you know, that could diversify your portfolio a bit, and maybe these companies wouldn't have to default and collapse and disappear so soon after building a property. You know what I mean?
Well, the market would probably
that's a whole other conversation, but
the market could possibly do it for you if you know, if we shifted all of this, you know, free money that the government gives away and tax breaks, you know, towards, I mean, it would just make it more attractive to build houses, basically. Yeah. So that's one option. Yeah.
No, that's a nice one. Just for new builds. Like maybe keep the tax as is for new builds.
Yeah. Or even increase it, you know, increase the discount.
Yeah. Okay.
You know, if it's a
supply issue,
if you're saving money elsewhere. So, and it is a supply issue. It's like it's a lot of things at the same time. But yeah, so where I think the supply argument requires like a little bit more nuance. I think I said before is like, you know, that there's people that are either renters or they're, you know, they have a mortgage or they own their home outright or they're an investor, but they're not static. You know, like they're not that forever. So like if someone stops being a renter, they'll start being a homeowner. You know?
Which you said earlier is an example of happening.
Yeah. And if somebody stops being an investor, then they'll put their house on the market for somebody to buy. Which will increase supply. So yeah,
is that what that does?
I mean, it doesn't increase the housing stock, but it puts another property in the market.
Yeah.
Which is I think that's you can see that sort of happening in Victoria, and I think it's a good story. I think it's a good news story.
Well, the graph If I've edited this right and you can see it.
Yeah.
So I guess touchy subject.
Yeah.
Some argue immigration is the real driver of housing demand.
Yeah.
Is that fair?
Yeah. So, I heard an economist on the Joe Walker podcast. I can't remember his name. Maybe we can put that in the notes. But
Yeah.
I think he put it really well. He was like, "This is a moral question that economists are bad at answering." But the economist's answer is going to be, the more people you have, the more houses you need to have.
Yeah.
You should just build more houses.
Yeah.
And then if you opening up that can of worms of like, should we have immigration or not? It's sort of a separate issue. It's like
it is. Yeah.
How many people are there? If we were having a population boom because people are having lots of kids, we wouldn't, we'd just be like, yeah, just build more houses. So
yeah.
So you just need to have the infrastructure to support the population, whatever number it is.
Yeah. Because that's the core expense, and probably if you asked a lot of people, that'd be the main reason they're not having kids, because things are expensive. Okay, so what is the larger percentage of that thing that is expensive? Housing. Yeah. It's becoming normal that not just 20, but maybe 30-40% of your wage goes straight to your rent.
Yeah.
Right.
And then you just feel like your life's not looking like your parents did when they had you. So
yep.
You're like, oh, maybe I'm not going to be able to give my kid the same life that I had. And then you just go, well, I'll bugger it. I'll just wait.
Yeah.
And then, and then all of a sudden you're almost 40 and sort of going.
Yeah. So then that's a whole other conversation of like whether there's a replenishment value going in, with enough people having children to feed back into the grey people that are coming, the grey wave. Hence why we have immigration the way we do in Australia is to fill a gap.
Yeah.
Of, workforce for one, the tax gap. These people have to pay taxes when they live here and work here.
Yeah.
And
they do.
Right? They do on every single thing in this country.
They pay
oh my God, right?
And it's very helpful.
It is helpful, right? It does. It tops up that pothole in the economy, and they eventually become citizens, right?
Yeah.
Which then fixes all that. But I don't know where I was going on that, but
okay, so there's
what I mean? Like that's kind of the aim of our immigration.
There's like it's like a musical chairs argument, I suppose. If I'm going to like count it, like properly think that I don't think that the argument's made in good faith most of the time. I think
of immigrants are the problem.
I think like if you look at polling from of One Nation voters, very, very few of them care about housing. Like I think it's a bad faith. It's kind of a bad faith argument that they're making about house prices. I think a lot of people just don't like immigrants for other reasons, and the housing is like
which we'll get into in another episode.
It's a thing. It's a thing that they can they get to they get to say see here, like see look check it, look I was right, they do suck, and I don't really take their arguments in good faith on housing anyway, housing and immigration. But yeah, like at a basic level, it is sort of like a game of musical chairs. Like if there are less houses and more people moving in, obviously this is like mathematics. This is basic maths. Like there's more houses than there's less houses than there are people. But yeah, just build more houses. Just build more houses.
Yeah. So the problem feels like that there's too many immigrants is because infrastructure isn't keeping up.
Well,
in a sense,
I mean,
schools, roads, houses, public transport.
Yeah.
Hospitals, wait times are longer, which is a whole other conversation. But which is why immigrants seem to be the scapegoat.
But this is where like the Victorian example I think is really like it's really illuminating, because Victoria's got heaps of immigration. Melbourne has heaps of immigration.
Yeah.
Heaps of immigrants are choosing to move to Melbourne, and the house prices aren't going up.
So there's some evidence there. I mean, I don't want to make anyone.
I got to couch this right, because like the house prices did go up in Melbourne, and they've just stopped recently, and in response to shifting the tax settings around a little bit, and so there's more going on. But on that demographic thing you're talking about, I got there's another graph up.
Yeah.
This is the demographics of Australia. This is why this is why we need to have immigrants. If we're not going to have kids in the replacement rate.
So for those listening, in the 70s, about 18% of the population were about 55 plus. And then at that same time in the 1970s, we had like a 32% of people between the 15 and 35 age range. And slowly, but surely over maybe what does that look like? A 30-year period, those lines have started to come together.
50 years.
50 years it is, isn't it? Yeah, 50 years, right? And then in about 2019 is where those two lines kiss and they cross over. And that is the biggest, like the clearest example of the grey wave of pensioners who are about to retire, or they are retiring, obviously, from the looks of it, 55 plus. There's a nice crescendo there, a big crossover. And 55 plus has jumped, and then people in that 15 to 35 has actually come down to about 38%, 28%, right? Which probably does make sense. There's not enough people working in the economy because a lot of those people are retiring.
Yeah.
Right. And who's going to do the services that they need?
Yeah.
The obvious one, nursing.
Yeah.
Who's going to mow their lawn? Who's going to...
Yeah, demographics is destiny.
Yeah, who's going to work
if your society is really top heavy,
with older people,
with people that are older, it creates this like impossible situation where working people have to pay more and more and more tax, for less stuff. Like the services get worse, and then they have to pay more tax for the worst services. Yeah, because there's too many people taking out of the system and not enough people putting into the system. And like all the rhetoric around immigration is always like, oh, they're taking out of the system. This shows you how we need working age people. Yeah. Like they're putting into the system. And I mean, the other thing is like, I think immigration's great for Australia. I love Australia with a big diverse Australia. It's awesome. I love,
I can only have sausages and mashed potato once a week. It'd be nice to have some variety.
A bit of variety. Imagine turning the clock back to just meat and two veg. This is very selfish. Like this is like the fat dudes. Like justification for immigration is like imagine Australia without kebab. Oh my god. That's right. It's kind of dumb.
You know what I mean?
Yeah.
Drinking wouldn't be the same if you didn't have a kebab.
Yeah. It's something to think about. But yeah, in terms of housing, yes, it does have an effect. The other thing is like, I mean, immigrants build houses as well. That's the other thing. Like, especially if they'll buy a house and build it. Yeah. They can work in construction, Yeah. Like if there's not enough people building houses, immigrants can build houses. We could, look at our skilled immigration intake. Yeah. And jig it to say, oh, we need more guys make it plaster or electricians or whatever. And, these are all in their own possibility. So, I think that the immigration population growth argument, it squishes the supply question to like this static thing. It's just how many people there are in the country. Mm-hmm. When you start talking about tax settings, you start opening that up and letting a bit more nuance into the discussion. You're like, well, yeah, they're not, it's not just how many people there are. It's what are those people doing? Where are they putting their wealth? Mm-hmm. Are they building houses? Are they tradies? Yeah. I think we need to elevate the discussion a bit and have a little bit more nuance. And
because this is an observation. There's a lot of younger people that are not white, and I see them driving around in nice, expensive looking cars. Yeah. So clearly they're bringing wealth to this country. I'm not saying I'm not saying all immigrants are bringing heaps of money, but you know what I mean? Like
they're working.
And plus, like the thresholds we have in this country for you to even come here and live here and work here.
Yeah, it's not easy,
right? So
it costs a fortune as well.
Even just applying for a visa is thousands of dollars, right? Yeah. It's not like we're letting anyone in. Yeah. These. Yeah. Totally. You know what I mean? That's what
I think it's like that's
a whole other conversation. But
if I was to summarize the immigration housing thing, I just think it's a side issue. I don't really think it's side. And I think that
it's not a contributing factor. That's what you're getting at.
I mean, It is, but it's one out of many, and also it's way more complicated than that. And also, people who bring it up, I think, aren't acting in good faith. I just think that they're making a crappy argument. They're not really talking about housing. They just don't like it.
Yeah. Okay.
Yeah.
Which is ironic that, stereotypically they'd be the people that don't benefit from the capital gains tax.
The immigrants?
No. The people who bring up the argument that it is the immigrants.
Right.
Maybe.
Yeah. Well, yeah.
Although, unless, I don't know, I'm not saying which party or not to vote for, but you know what I mean?
Yeah.
Sure, Pauline Hanson has some properties.
Oh, yeah. Hell yeah. Yeah, for sure.
Yeah.
Yeah.
We're not telling you how to think. We're just stating things that are obvious. So I guess if we wanted to touch base on a moral question, and then we'll eventually wrap things up soonish. Like a moral question, is housing primarily shelter or primarily an investment asset? Or should it be?
Yeah. Well, I think, if I'm going to try and make a good faith argument for why John Howard and Peter Costello were, made the tax system the way it is.
Mm-hmm.
They said it's really, really important to have supply of rental houses, but I just don't think it worked, basically.
Yeah. Okay. Was that a problem at the time?
I'm not sure. We'll have to
double check that. We'll do like a follow up to this and respond to any comments. So get yelling at us down below, and we'll fact check or maybe add some extra information for context, like a part 2 of this.
Yeah, but basically, what the consequence of their decision, I think, was for housing to turn from something that people just live in to something that you could make a hell of a lot of money on. And then since 2000, Australia's had this like big bonanza of people making obscene amounts of money by speculating on house prices going up and up.
Yeah.
And now I think we're hitting this point of political gravity where there's enough people that are losing out from that bargain that governments are starting to look at it and go, a lot of people are really, really upset about this.
Yeah.
And
if I was maybe to Steelman argument it in a way, or historical context, I know that there was this during that 80s, 90s period, Hawke and Keating, there was that, opening up Australia to be a bit more involved in the globalization side of things. And then there was this massive flood of investment for businesses and corporations to the point where we were having helicopter crashes in the cities, right?
Yeah.
Because of these, big corporate foreign owned companies, right? And then I think there was that recession that we needed to have.
Yeah.
That Keating talks about, right?
Keating says, yeah.
So I feel that if there was a short-term approach, which is the Steelman argument, the short-term approach, there was this recession and this big dip in the economy and the big dip in the market, right?
Yeah.
So a Howard Costello kind of approach maybe was like, all right, how do we kickstart this economy again?
Get more investment.
Yeah, maybe. Yeah. Like that's...
Yeah, all these things are about trade-offs,
Yeah. And then because it was so beneficial.
Yeah.
And plus Howard being in for so much longer, what's that, 11 years, 12 years?
Yeah.
Right? 11. Yeah.
Yeah. Australia's relaxed and comfortable Australia.
Right.
So John Howard's relaxed.
Yeah. So because there was no real opposition or anyone coming in to change that tax.
Yeah.
It could play out.
There wasn't enough like political gravity for them to it wasn't hurting enough people yet.
No.
For like Wayne Swan to do it.
Yeah.
But I think it is now. And like, Grattan Institute says that halving capital gains would lead to a 1% reduction in house prices. Okay, well, that doesn't sound that great.
But how does 1% ripple out?
Yeah, well, maybe that's one. I'm not sure if that means that house prices are going up 1% slower, or if it actually means they'll literally drop by 1%. But you go 1%. You go 1%. All right. Well, I mean, 1% of $1 million is not really that much money, and that's not really helping me that much. And so what's the point? That's but then there's a second part of this, and we're talking about the morality of like tax policy.
Investment over shelter.
It's the benefits of the capital gains tax discount, like nearly 60% of the benefit goes to the top 1% of earners in Australia. So it's probably the least fair tax that exists in Australia.
Yeah.
I mean, imagine if like, you were trying to get elected and you went to the people and you were like, I've got this great idea. I'm going to create this program and 60% of it is going to go to millionaires, the top 1%. There is a fairness
The people with
argument here.
the people with the actual 1 million number in their bank account,
Yeah.
not negative 1 million
Yeah.
on their mortgage.
True. Yeah.
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 That's what we mean.
No, like
It
big
goes to
high
those
income
people.
earners, high income earners.
Yeah. Okay.
Get the lion's share of the benefit from this policy. So you can make a pretty good argument for getting rid of it, even if it did nothing to house prices. And there's also, there's an opportunity cost for all this money that we're shelling out. Like I think it's like $250 billion capital gains tax discount is going to cost in the next 10 years.
Yeah.
That's a tremendous amount of money, and
The government's forking out.
yeah, and it's a huge cost. And if you,
I think I saw a graph, and it was like the biggest expense, one of the biggest expenses.
yeah, it's more than pension and a whole bunch of other things. It's a bit. It's spooky. It is spooky. I mean, and when you look at it like that, you think, well, what else could we spend this money on?
Would
Building social housing might be.
Or if you want to get people on side, maybe it's like, all right, well, we can increase your pension fund
Yeah,
if you vote for us and let us change this thing.
Yeah.
Maybe.
do something more progressive.
Yeah.
Like and not like in like a political sense.
We
Like
could probably knock off another 20% off your HEX debt.
Yeah.
If you vote for us for this policy.
Yeah.
Which I don't think that's the cohort.
Yeah.
You're worried about.
No.
Getting a vote from.
No.
More retirees, I think. Yeah.
Yeah. So I guess, fairness is a tricky one to talk about. Economics is probably a bit easier because you get to at least pretend that you're not like, you're not making you can pretend that you're being empirical or whatever. Yeah. And on that side, I think that, it's incredibly expensive. The capital gains tax discount is incredibly expensive. Could use that money somewhere else. And also it's kind of unfair that the people who earn a lot of money get most of the benefit from it. So could be a go, scrapping the capital gains tax discount.
Yeah. Okay.
Yeah. But the other thing, one last thing, I think that the discourse on this is shifting. I saw a positive opinion piece in the AFR on scrapping or changing capital gains tax discount, and the financial reviews that they're not normally keen, not normally keen on raising taxes on people with a lot of money. They're sort of in a different camp. So if they started going, oh yeah, Jesus, we got to do something about this, and then I think that the needle might have shifted.
Yeah.
So we'll see. Watch this space. But I think there is an urgency to do this, and there's political weight behind it, and it looks like it. This little unfair quagmire of tax policy might be getting looked at.
Yeah. Okay.
We'll see.
Let's bring it home. Wrap it up. What would be a balanced housing reform package, and what would it actually look like?
Oh, Jesus Christ!
No pressure. We can change question.
I
guess if you had to prioritize what matters more, supply reform or tax reform?
You got to do both. Yeah. And we are as a country, we're doing supply reform. We're like Victoria's doing it hard. Most we're building. We are building. It's not quick enough, but it's happening.
Yep.
I think that a different way of phrasing that question is like, is supply reform enough? Like is only increasing supply enough?
Which doesn't that doesn't sound like the solution though.
Yeah. Because
it would, or like the people that benefit the most, they would want you to complain about supply more because it feels like it's a further down the road threat for them because it takes months to build a house.
Yeah.
Coupled with like the approvals you have to get from city council but
people hate construction in their neighborhood. Like everybody wants the price houses to come down or not come down, but everybody admits that there's a housing crisis. They don't like construction in their neighborhood.
Yeah. So like saying it's a supply thing and pushing that to be the onus of the problem is like, but it would still be counterproductive anyway, because if there is more houses, the value of yours would go down anyway, if that's what they're saying.
Yeah.
So either solution does bring the number down.
Yeah. This is the basic like supply demand graph, you know? Like,
yeah. But then does that, go, oh, well, if we're focusing on the supply thing, that gives me a little bit more time to let this Easter egg grow, and I can get my return on investment because I've still got 8 months left on this. I still need this thing to sit empty for 8 more months before I can actually get the tax cut.
Yeah.
All right. So if we just keep going, I don't know, maybe that's the theory. That's me being tinfoil hatty there.
Yeah.
I don't know. Is that?
Yeah. No, I think that,
but they need to be both.
I think that I think that you can make a lot of fairness arguments for reasons why the capital gains tax discount should be reduced.
Yeah.
And then we need more supply. We need more houses. But the population's growing. We should just have more houses anyway.
So two-pronged approach. State, local council levels, speed up approvals.
It has to be like every level.
Doing taxes that de-incentivize investments, like in Victoria as an example.
Yeah.
Coupled with the federal approach of reducing or adjusting the capital gains. Yeah.
Yeah.
Okay.
And building more social and affordable housing. And just building more housing full stop. Yeah. Yeah.
Because wouldn't it be?
It's not just one thing.
No.
Yeah.
But wouldn't your value of your property go up if there was less homeless people getting around?
Oh, I don't know about that.
That's a whole other conversation. But like if
I mean, there's been spikes in homelessness all over the world and probably prices.
Yeah, and it's a global thing at the moment. We can get into that as a different discussion. But like,
but no, I get
the social housing.
Like,
if people could get off the streets,
if we had a fairer society, more people want to live in it. And, I just think you can't have the value of property continue to drift further and further apart from the value of a wage. Yeah, and have a fair society.
Yeah,
because it creates a sort of world where you can't work hard and get ahead. You just have to inherit everything, and that is a bummer. So whatever the government can do to fix this, they should do it. They should have done it 10 years ago. They should. It's an urgent matter. Yeah, and the government that does fix this will be coronated. That they're going to be king for life. Yeah, because they're going to be
by Charles.
Yeah, it's just going to be so popular. Like it's just going to be so popular.
Yeah.
But we'll see. We'll see.
All right. Look, thank you for watching GIRT. I've been Ethan.
I've been Owen. Thank you.
And again, leave some comments down below. We'll aim to try and do a two-parter where we revise any of our facts, or we respond to you guys, or if you give us some good counter arguments, we might, I don't know, who knows, whatever. Yeah. But we'll try to do a part 2 of something on this.
Yeah.
Thank you for watching. Goodbye.
Thanks.